entering calls on Tesla expiring March 15th for a $190 strike price. Now, the reason that I ended up entering this, I posted my analysis over on X. So if you guys want real-time analysis from me, go and check me out there and check out the second link in the description to get access to our Discord. It's only $5 a month. There's tons of content and trading bots and trades over there that you guys can follow. But looking here at 223, I said 1 hour inverted head and shoulders playing out on Tesla. We're going to go over what all of this means from a technical standpoint. So if it just sounds like a different language, bear with me, we'll get you there. Target number 1 is neckline at $195. Target number 2 is $200 to $210. Stop loss is at a lower low of $175. I am not ruling out a rejection at $200 to $210, and longer term, I do think we could test $165 still. Now, if you want to get the full reasoning on why I think $165 could still end up happening, go and watch the video that we did yesterday going over the bigger time frames and what I think the next 3 to 4 month picture could look like. A smaller time frame. What does all of this mean, right? All of the mumbo jumbo that I said over there, in short, what the hell does it mean? Well, the first thing that you're going to see is that recently we have hit a low down here at about $174. Now, when you're looking at candlesticks, I want you to not just look at the price and the patterns and what specifically is happening. Think of the psychology behind it, okay? This is all a psychology game. It's a psychology game being able to keep your emotions in check. It's a psychology game being able to regulate the amount of bullshit that comes your way every day, whether it's, in the workplace, whether it's actually you trading, whether it's crappy information coming to you while you're trading, all of it. You're in charge of filtering all of that out. That's a psychological and emotional game. And what you have to realize too is that behind closed doors and even in the public is just a play on psychology. Smart money is constantly trying to hand the bag to retail. Retail is continuing to greedily try to buy up into overbought markets, aka AI right now, which I'm not going to say is not fundamentally having a reason to pump, but someone's going to get stuck holding the bag. It's not going to be just like in the dot-com bubble, it's not going to end up being banks as well. I mean, some will, and some hedge funds obviously get crushed, but this is all a game of psychology. And so when we're watching price action, I want you to really take that into effect. And I want you to start to be able to see how candles react around specific levels, not because the level's there, but because of the psychology of the collective whole in the market. So obviously, when we get a gap down like this on earnings, psychologically, that is a very scared market and a very scared investor. We have this big gap down. We see here that this candle, and this is very important, right? Because this candle opens at 189 and it closes all the way down here. So that type of candle is still screaming to us, okay, because they're not buying it up, right? We can't buy it up. So we have to sit here and we have to wait and say, okay, who is going to step in to actually push the market higher? Because it's an auction. Right? People have to step in to bid it up. So the next day, we open here at 185 and we close down here again. We didn't take out this low yet, right? This low here was not taken out. So we're still bearish, still in this trend, obviously, but we held. Okay, good. Next day, 185 and we close near high of day. Okay, what does that tell us? Buyers are coming in. Then the next day, we get this pushback up to 195. We come back and down again, make a lower low. Okay, and now we push back. Something to note here. This is where structure is extremely important, and I'm not like an ICT master. The dude's, I think, a genius, but I'm not somebody who's teaches this at all. But we have to understand that this structure, distance level here of 195, this has been respected multiple times. And so there's a chance now that as we come in on this low, that we could pull back to retest this level. So what we would do is come in here, just get an idea of pushed up to the same resistance level. Where might we pull back from inverted head and shoulders? And we're going to talk about what that means from a psychological standpoint, right? But as we come back down, notice that we don't make a lower low. We actually hold, which is where this shoulder is beginning to form. This is important because it's showing that buyers are stepping in, that they are not going to allow it to get sold off lower before they decide to start accumulating or adding to their positions. That's all this is. Institutions, I say this every fucking day, but they can't just hit the market buy and the market sell. They have to build positions, right? Whether it's algorithmically or whether it's them actually building out a position. They have to. There's not enough for them to fill on all of these positions as fast as you might think. They need liquidity there. This is why a lot of the times you'll see parabolic massive moves and then the market will crater because they're selling into that liquidity. Now, I want you to understand that we actually broke this and tested the same equal resistance. That's what makes this an inverted head and shoulders. And now there's a very high chance that we will push back up to $195, which is going to be my take level. I actually think that, or my first take profit level actually hit $190 at one point after hours. That's my first take profit level because this is where the neckline is. So at this point, once we get up into that 195 level, it will be in do or die. We either break through 195, and once 195 is taken out, then we move our way back up to test 205, test that this old and also fill that gap, and then that will be my final area where I'm going to end up just closing out this long specifically. There's still a chance that we can move our way back down, but in this instance, it seems short term that we may have found this bottom. Now let's pop up our indicators here. And the one thing that I do want to also note, if we just zoom out, is that on this lower low here, at the bottom of your screen, I don't like to use a ton of indicators personally, but I do want you to also notice something that occurred here. As we lower low on the daily chart to the RSI, it does not mean that the stock has to recover, but it just means that as we're breaking structure, as we're pushing into a lower low, that the momentum, the strength of that move is weakening. It's not reversing yet, but it's weakening. And that's called a divergence. When you see this, push looks to be on the surface as selling pressure, but then you start to see it get more weak as we're pushing into those lower lows. And like I said, it's just a discrepancy. It doesn't mean that it has to actually come to fruition, but it's definitely something that I'm going to take a position on and that I'm going to risk some capital with. Now, at this point, I'm on this trade, which is very good, but where was my stop loss? Where would I have placed it, right? Sometimes you could come in and say, we're just going to set a stop loss if we break this level, this old shoulder here on the left. If we take that out, then we're going to walk away. The truth is, it's not going to look perfect. So I wouldn't play a stop loss that tight. My personal stop loss was going to be down here at a lower low, simply because if we draw this out along the bigger time frame here, get a position later, and we ended up entering around here, that would give me a stop loss, a clear break for sure. That's a clear break. And from here up to our take profit, that would give me at worst a 2-to-1 RVR, but in reality, we would probably have waited to see if we broke down here at about 180, and that'd be about a 3.4 RVR. So not perfect, not the best, but a solid trade. And we're going to see how it plays. If it plays out well, that's great. If it doesn't, who gives a fuck? I see so much, and it's really tough as a keeper, I guess, or as an influencer to teach you guys not just the charts and the bullshit, right? But to actually instill with you guys my mentality and my psychology, because this is so disconnected so many times, because number one, this for so long. So I'm just kind of like 1,000-yard stare comes to trading, that it's just everything is so ingrained to me. I've been teaching it for so long. I've been helping people for so long that I forget what it's like to be a very beginning student. So I feel that there's a lot of disconnect. But I also feel that there's a lot of disconnect because who you are outside of the market is who you will be inside the market. And if you're somebody who's undisciplined, impulsive, which I was and I still am, right? You're going to be trading. You just are, because we live in a world where there are rules, and the world, the system, whatever you want to call it, they give you these rules that you can play under. And while everybody wants to bitch about the rules, about how unfair they are, and about how they don't want to play them, when you're given the freedom not just in trading, but in life, when you're given the freedom to do whatever it is that you fucking want, nobody knows. They don't actually want the freedom. They want to be told what to do. They want to have the structure. And that's why they hire coaches. It's why they hire people, right? Yes, there are scammers out there, but they want structure. They want to come to me and say, hey, give me structure. Help me out with this. And there are so many students that thrive with us, but there are so many students that just don't. And at the end of the day, it all comes down to risk. I mean, at the end of the day, like you guys can see, I'm not the best trader. 61% win rate. Like it's just, at the end of the day, it's just showing up, learning, being okay with it, right? I would say that for everybody here, don't go try to sell a course or sell a service unless you really fucking think that you can help people, right? Because if not, it will end badly for you. But post your internet. Hold yourself accountable. I posted all of my trades and all of my investments on my Facebook account for years, my first 3 to 4 years trading, with no intention of doing anything with it, just because I wanted to hold myself accountable. Anytime I wanted to lose weight, like right now, if you guys lose weight, put in the comments, we will do a challenge together. We will lose weight together. I'll hold us accountable. We'll do it here on X. At the end of the day, it's holding people accountable. And it's so hard nowadays because it's so easy to get swept up in not just what's the next trade, what's the best thing that's going to be happening, but just the instant pleasures of life. Like it's so easy to get swept up in it every fucking day. And then you bring that mentality to the market and you're playing against people who, I posted this the other day, but it's like, you're playing against people where not only is this their only job, but they are blood hungry and thirsty. They have been doing this. They've been killing retail for years. And it's like, you have to realize what you're actually doing here. I'm not gonna be able to find the post. Here it is. So basically, I said, who is on the other side of your trade? Now, I know we're going a bit sideways here, but this is very important. If you're a long-term investor or if you have a lot of capital and you want a consistent way to be making money, one of the best ways is to sell cash secured puts. Okay? 95% of 95% of people buying options, I should say, fail. And I used to think to myself, well, who the hell's on the other side? Like, if I'm losing 95% of the time, someone's winning 95% of the time. Like, statistically, if I'm buying a put option and you're selling me a put option, you're winning 95% of the time. And I started thinking, like, I have to learn how to think like these people. And so I said, who's on the other side of the trade? You're up against a top-tier hedge fund manager, Goliath institutions, countless algorithms, and you think that you can beat them at their own game without mastering the rules first. Don't gamble with the market, educate yourself, and take your time. I'm only here because I survived long enough to figure it out. And by figure it out, I was just here long enough to survive. Realize that the next trade, the next investment, the next thing is life. And I said this too today, like who you become in the process of all of this shit, like that is the actual goal. Because then you're an individual, and I'm this journey, right? 9 years in, I like to say I'm a student, a master, worried about what's going to happen next, right? Like I remember first year of team, my first year of running my community. If you guys do want to come trade with me every day, check out the Discord community down below. But I remember people would, as soon as I take a trade, and they're like, dude, what do you think about, don't you think the stock's going to go down? I don't, should we still be doing this? And I used to feel like the world on my shoulders, like, dude, oh my God, maybe I shouldn't just, no. You have to detach from that. And I had to realize that to myself, that like, at the end of the day, I have to practice what I preach. If I'm going to take the position and I'm going to be stone cold about it, right? Enter, exit. So we run trading bots, but like, even with my own trading dealers, then I got to be about it. Like I have to be about it. I can't hide. I can't post. And that's why this is the biggest thing I'll say. And I'm not shit talking other people like who are in this space. It's fucky when you're the hero. It's easy when you're posting the gains, right? It's when you start eating shit publicly that people can't keep up with it. But the point is, you're supposed to eat shit. If you're trying new things, you're going to fail. And I'm never here telling my students like, dude, I make money every day, or that I'm so good, because like I'm not. You can see 2 days so far in February, right? Like that's not what it's about. And I think that when it comes to the trading space and the investing space and the finance bro space, we just need authenticity, and just not even how much money I make. Authenticity in how you feel day to day, how you feel taking a trade. Knowing that 9 years in, like, yes, I'm very robust, but I still get emotional at times, specifically when it comes to my students. So I hope you guys have a good Valentine's Day, which is definitely today. I totally forgot about that. And I hope that you guys take care, not at how can I make the most money going into the next couple of months. Because I'm so past wanting YouTube views and wanting to grow in popularity. Is to actually make a difference in people's lives, and to how I've actually been able to forge my psychology, forge my mentality, and instill, hopefully, a piece of how we operate in the market from a psychological level. And so I hope this video helps, guys. Let me know down in the comments what other tickers you want me to go over. Let me know what you think is going to happen with Tesla. I'll see you guys next time. Peace.